Hi, fellow traders. I hope you guys having a great weekend. It's been beautiful over here, even though my Gamecocks got thumped yesterday. Um, but they look pretty decent getting thumped. So that's all we can ask for at this point. We're trying to build a team over here, trying to get back competitive, and it takes time. Just like our trading, it takes time. And we just have to be patient and let the process work. All right, so the temptation to quit will be the greatest just before you're about to succeed. That can't be any more truthful in trading. Just think about it. If you just think about the trades that you're in. How many times have you just been frustrated and got tired of waiting? As soon as you saw some profit, you took your trade off, and then it worked. It's like right after you took it off, it worked. Frustrating. I know. It happens to me sometimes still. Used to happen to me a lot until I realized what I was doing. And it's the same as far as our career as a trader. You know, and we always come up with all of these good excuses as to why we're not succeeding. I mean, I can't tell you how many excuses I've experienced. I've heard them all. But those that I can talk to and can get them to understand that they need to leave these excuses behind and move forward and look toward the possibilities, they will succeed. I mean, just to give you a quick example, it's just like this SureTrader thing. Everybody that's come at me with all of these excuses, if they were completely 100% honest with me and with themselves, they were able to see, hey, it's not SureTrader ripping them off. It's not CME Group or what's the other one? I can't remember. It's not them ripping you off. It's you not understanding the rules that you have to follow. No, there are rules. You just don't open up an account and start trading. With any broker, there are rules that you have to follow. And if you don't follow them, you're gonna get nickel and dime to death. And there's just so many excuses, especially in trading. But if you can work through those and just take personal responsibility for everything as you go, you have a really good chance of succeeding. Now, you can complain, you can remain the same, or you can decide to commit to work towards becoming that trader that you've always wanted to be. Use your pain and your struggle as your reason that you need to show up every day. Use that struggle as your strength. It can happen. So, but just know that temptation is going to be it's going to be overwhelming right before you're about to succeed. Now, today, I'm going to kill a couple birds with one stone. We're going to go over Friday's trade. We're going to close the week out. And I'm going to elaborate a little bit more on the ROKU trade and that strategy. So just bear with me. I'm going to try to cover as much as I can and not let this thing drag out. So on Friday, the market was just garbage. For me, it was just garbage. I didn't see any opening range trades that I felt comfortable taking, or nothing really setting up. We practically didn't have a watch list. And so I just sat back and waited to see if we were going to get a secondary move. And I ran across this OSTK that was on the reversal scan. This hit our reversal scan. You can see at the open it pushed up, but it didn't hit our scan because there was no gap, no volume. So it wasn't in play until the market opened. And I don't really chase these. These, if they're showing no signs before open and then it wakes up, I look for a secondary move. So here we ran up and then we sold off. Now I didn't hit the reversal scan until we had this big sell-off. And so as this was happening, I was talking to you guys that were still in chat, because some people gave up early, how the price action was telling us we need to be careful. I know we were selling off into this 200, and people just automatically assume that it's bouncing here. There were some people that took this long here assuming that it was going to bounce here. Some people took it long here assuming that it was going to bounce here. And, here it might have been a good look for a bounce, but then you're bouncing into all of this resistance. So that's not a solid, entry there. And as this thing kept selling off, it finally hit the reversal scan. So that's when I'm going to look for it to actually reverse. Here it didn't hit a reversal scan, so I'm going to expect it to continue some trend continuation. Even though we bounced here, we were bouncing into a ton of resistance. So I'm thinking rejection and trend continuation, and that's pretty much what happened here. But we don't have shares of OSTK to short, so there was no way I could get in and short this. And as it was coming down, we had these solid red bars, and this candle is bigger than this candle. It's showing a lot of momentum running into the 200. So there was no way I'm going to anticipate the bounce here. So we have to wait for the momentum to slow down and the price action to tell us that there could potentially be a momentum shift, and it needs to be around a level of support. And so here we were looking at the 200. So when it put this candle in, this is typically a candle you see when the stock is about to reverse. All right, this is, some people call it a reversal hammer. It's just an indecision candle where you got a long wick coming to the downside, where it tested the price action down here, didn't like it, and it got bought back up. So this is one of the weakest, this is one of the strongest red candles you could get, because it actually closed on an upswing. If you looked at the 1 minute chart, you would see that it's closed on an uptrend on the 1 minute. So we saw some strength. So you wait, let the candle open. If it opened higher than we closed, we never did make a lower low on this, and we started to push up over the 200. There's an entry right there. All right. And now the first target could either be the 9 here, or we can get halfway between. So I'm thinking I'm going to take it halfway, and I'm going to take some more at the 9, because there's no guarantee that we're going to get through the 9. We may be coming back here. It may reject here and may be good for some more continuation down, which I can't trade because I don't have any shares to short. So we got the entry, and I was trying to take half off here, and instead of taking half off, I actually bought another half position. And that's just a product of not paying attention to what I'm doing. I clicked the wrong button. I clicked cover half, which is buy, instead of sell half, which is what I should have done as a long trade. So I ended up doing that and turning around and buying, taking it back off. Well, taking half off. And then it started to sell off. And it had some serious, looking at time and sales and level 2, I saw some serious selling pressure coming, and that's why I dumped it here versus waiting to break even. And this is what we were talking about in chat around that time, why I took this off. And I didn't really like the way the market was trading, period, that whole day. So I kind of closed my mind to taking this on the second attempt. And this would have been a very lucrative trade. Had I just caught it on the second attempt, I would have made my money then. But sometimes you just have to trust what the market is telling you, what you're feeling, and just walk away. Like if I didn't walk away and did this again next week, this may not have worked. This may work 3 out of 10 times, and I'm not looking to get the 30% moves. I'm looking for the 70% moves. So, I still stand by my decision to stay out of this. Now, another thing that could have happened here is, maybe I just wait until the 9. I don't take profit unless I hit the 9. In that respect, I would have still been in this trade because I'm in here. The stop has to be below the low of this candle. And so if we don't make a lower low and we bounce here, we just made a higher low, which means that's a sign of strength and we may be pushing up. And that's exactly what happened here, but I was already disengaged. But had I not taken it off, I'd still be in, and we would have hit the 9. Because by then the 9 had come in about 40 cents, 30, 40 cents from when I first got in the stock over here. And my first target would have been the 9, and then we would have gone up here to like red to green, right up in here. Would have been a really nice trade. But there again, I can't second guess my process. My process is halfway between, take profit, especially if you see it start to struggle. The name of the game here is locking in profit so we can grow our account. Now you'll see in a minute, I'm going to share with you the ROKU trade again and the strategy and the thought process behind it. But it's a different mindset. And that's why I tell you, if you don't have a lot of money, if you have a small account, you have to lock in profit. You can't sit there and say, I'm going to get this bigger move. I don't care, because we have to grow our account. We have to get out of these brokers like SureTrader and CME Group and all of these that cater to newer traders that don't have the money. We have more advantages once we get out of the scenario that we're in. Now our goal is not to stay here, it's to grow out of this. Use it to our advantage. It's no different than these guys who have bad credit and they have to go and buy cars from these second tier used lots that have this really bad financing. You got to have a car. You need a car to go to work. You need a car to take your kids to school. You need a car to do all of this stuff. You have to use these things until you can put yourself in a better position, till you get your credit better, so that once you pay this car off, you can go right to a dealer and negotiate some good interest rates. It's kind of what we do here. Same thing with trading. That's our goal. So that was our trade on OSTK on Friday. Really could have made some money on this, but didn't work out. And really last week was a really, really tough week. So you guys know you were in it. We didn't really get a whole lot of follow through. I should have had the Oh, I should have had the SPY chart up, but you could see the volatility kind of died the last 2 days. Wednesday was just pretty much my fault. I started out with the ill-advised trade, did not wait for it to set up, and I was a train wreck. This should be flipped. I should be up $380 versus being down. So the week was kind of messed up because of Wednesday and my inability to trade like I had some sense that day. But Thursday and Friday were just really low volatility days. That was really tough to get some moves. The trend continuation, the one that we normally make some good money on, just was not there. So that was pretty tough for the week. So only ended up green $195.88 for the week. Really, really bad. Not the results I look for from week to week. But based on how the week was for me and how I executed this week, I'll take it and move on to next week. As long as I'm green, I'm happy. I'm adding money to my account and we're ready to move on. And that's the mindset, that's the mentality that we've got to have. So 11/15/56 for the month. And let's update 31/114/40 so we can update this. Oops. So 31/114/40, that's where we are for the year. Yes, I'm a little bit behind where I wanted to be, but that's fine. I'm not focusing on that anymore. I'm just focusing on trying to execute and maximize each week, and then we'll see where we end up with at the end of the year. I made that mistake. That's when I made the biggest mistakes, trying to reach goals, trying to hit a certain target. For me, it just doesn't work. So I'm not thinking about that anymore. We're just trying to get whatever we can, however we can, out of every month. Now, I'm going to share this with you this week. This is my weekly P&L. This is showing you where I am from week to week. And you can see back in February, we had some pretty big weeks. Had the big spike back in February. And then after that, it's kind of been downhill since. I've only broken $1,500 in a week twice since February. And you could see I've been somewhat in a downtrend. Now, you can't analyze this 100% like you would a stock chart, but you could see your performance over a period of time. And you could see since the 17th week back here, I've pretty much been in a downtrend. Had a little spike up here in week 34, but just been kind of in a downtrend here. And I don't know. I know the last couple of weeks I haven't been 100%. And you know, it may be something I'm doing. I'm not focusing like I should. But this is I'm not going to make wholesale changes. But looking at this over a period of time, this is telling me that, hey, I'm heading in the wrong direction. I'm not negative, but here the market should be giving us better opportunities. And for some reason, I'm not taking advantage of it. And so I went back and I did some digging and looking back. And this week in class, I'm going to share with you in the class this week what I found out and some changes that we're going to have to make. Or it might be sooner than that. But it's very profound. And I think it's going to help turn this around a little bit so that I'm starting to maintain versus continuing a downward trend. If I was maintaining and just kind of hanging around the medium here between $1,000 and $2,000 a week, I wouldn't have any issue with that, with an occasional dip. But when I'm seeing a pattern develop, that's when I become concerned. So we look at the equity curve. We're still going in the right direction here. But if I discount the trend that I'm seeing on the weekly, then I can end up with this, and it can continue to come down because I didn't make the correction soon enough. And I don't want to end up with that. But you can see really nice equity curve. It has been slow. The growth has been slow. We haven't had any big spike ups or big run ups. Slow and steady. And for me, slow and steady wins the race. All right, so that wraps up last week. Kind of gets you ready, know where I'm standing now and where I'm focusing on for moving into next week. All right, so this is the big trade we made on Roku. Now, you're not going to see this in my total because this wasn't taken in the SureTrader account. You could tell by the commissions. It's easy to tell whether I took it in SureTrader or not. You just got to look at the commissions if I don't say anything. I do have multiple accounts. One I swing trade in. I make a point to share all of those with you. I have my speed trader account that I do all day holds in. I don't talk about it. I used to talk about these a lot, but what happens is with new traders, when you're talking about a strategy and you're making big money on it, then automatically your mind is want to gravitate and do that. It happened with this when I introduced it. It happened with the earnings trades when I introduced them. And I know it's human nature. It's just we want the fantasy. That's what's marketable. That's what people are selling themselves to you on, is the fantasy. I want the fantasy. But you got to be realistic and you got to be smart and understand that, hey, if you want to sustain your career over a long period of time, you're going to have to learn how to trade. And you're going to have to learn how to put yourself in these positions over and over. And so the all-day hold, this is a strategy that I started. I was still working. It was like the last year that I was working full time. I was getting frustrated at times trying to get my screen time in at work so that I can get my orders in and trade the open and then come back at lunch in the afternoon and try to catch a trade or two, some reversals or whatever. And I was thinking, what if I could just find the stocks that are trending down all day, that has the ability to trend down all day, and I could just get in it, set my targets, and let it work. And so I worked on this strategy for a long time before I actually took it live, trying to figure out how to find the stocks, number one, where was the right place to put the stop, and all of that. So let me take you through real quick. Now we do have a class on this. I do have a class on this. This is toward the end of the day trading class. Just like I'll do this strategy, I'll do the earning strategy, because these, you need to have some money in your account. You cannot trade these with a small account. It will hurt you. And unfortunately, too many people did not listen to me, and they tried it, and on one trade, they blow up their account. And most of the time, it was because they got scared out on a quick volatility dump or pop, and they took it off for a massive loss, and the trade actually worked. So that made this thing even worse. So these are strategies. I only teach these late, and I don't call these entries out because I don't want people jumping in trying to follow. Even though you say you're not going to follow, you do, and you end up getting hurt. You know, there were a lot of people that got stopped out of this Roku trade who got pissed because I made money and they didn't. And it's all because they didn't understand the strategy or the thought process behind it. So, going to give you a quick overview, but you're going to have to study the class. And you're going to have to practice these, paper trade these, so that you understand exactly, you know, what you're looking at and what the risk is going to be involved in. All right, so Roku, you can see on the daily chart, you look at this, here's where we closed the day before, right? On the 9th. I think this was the 9th, right? Yeah, 9-9. Okay, this closed on the 9th. And here we got down that morning. I think this was on our was this on? No, I think it was a little bit too expensive this day to be on our scanner. My scanner picks up under $150. So we were looking at this because of the gap down here. And it looked pretty good to me. So a look at the 5-minute chart. Why isn't my 5-minute chart? Oh, here we go. I don't know why it was blowing up like that. So we look at the 5-minute chart. Let's go back to the 10th. I'm going to show you what we were looking at. Okay, here's the 9th. This is the 9th. This is the first day it started selling off. I think. No, wait a minute. No, this is the 10th. Still need to make it a little smaller here. This thing is not doing right, man. Hold on a second. Shoot. All right, now we're in good shape. Okay, here is the 9th. Go all the way back to the 9th. Okay, here's the 9th right here. All right. This is the sell-off day that we saw. Let me remove this. We don't need this right now. Okay, this is what we saw. So coming into the 10th, here's a little gap down that we saw, right? So what I'm looking at is here's the support that was put in aftermarket the day before. Okay, we had a little dip down here at the close, but it kind of settled here aftermarket. So at the open, we got down and we tried to push up. We got down and we tried to push up here. So it hit this level. It hit resist. This was support. Now it's resistance. It hit resistance, sold off. It tapped it again. This isn't really a... Okay, here we started to push up. We got a green candle here. Made a higher high, higher low. Higher low. Okay, this one opened. This one opened down here. It opened on a gap down, but it pushed all the way up and retested this level and came back and closed. Now remember, this is the weakest of the green candles. This is the weakest of the bullish candles, which typically tells us any momentum to the upside got stuffed. And that's what happened. So the entry, the correct entry on this would have been right here. Right in there. As soon as we broke the low of this, that would have been where I entered. I like to enter these pre-market because the proper stop is going to be a few ticks above the high, the pre-market high. That's where you want to put the stop, because it usually you're not going to have a whole lot of range here. Let's say here, let's say if I got in here, I need to see what the price is. Let's say around 159 is where I would have got in. A point and a half is solid. I probably would have given it 2 points. That's a solid risk for look at the potential reward. I think this day, let's see. On this day, there was the 20, the daily 20 at 145.64. So I said worst case scenario, the daily 20 was right here. So worst case scenario, this is where we would have got stuck on the trade. Worst case scenario would have been right here. All right, look at the risk. Here's the entry. The risk is just above this. I said 161 is probably where I'd have put my risk. And look at the entry on this. All the way down to 145. I don't even have to add that up to tell you how incredible of a risk-reward ratio that was. All right, but I didn't take it pre-market. Okay, it's really difficult for me and during the school year because I have to take my son to school. I don't really get back to my desk until around 8 o'clock. So I missed that entry. So what I had to do was wait for the open. Now I don't like doing this, but I have to wait for the open. And what that creates is an issue for me in terms of my risk, because most of the time there's no way I can risk up here. So I got in this trade at 155.32, which is, let's see, I got in this trade right in here. So I'm going to take that line off. I'm going to draw it. So I got in right here. I don't know why I took both of them out. So I got in right there. Right under the opening 5-minute candle, because I didn't know if this was going to rip up and give me a better entry or not. So I had to get in here. I can't watch this in day trade. I can't day trade out of 2 accounts at one time. It just doesn't work. I tried that when I was trying to do the smaller account along with my 5K account. You can't do it. It really messes up. You have to focus on one or the other. So I like to be in these and just set it and forget about it. If it works, great. I'll get an alert. I'll set alert on my phone through TD Ameritrade for this stock hitting a certain price area. Then it will alert me that I'm near a target, either my profit target or my stop. And then when I get time, I'll take a look at it. But you can see this is a massive amount of profit that I missed on this because I'm not here. Summertime, this would have been nailed. This would have added another couple grand to this. All right, but had to get in here. My stop was here at 160. Like 160.25 is where I had my stop. And you can see where I got in at 155. So I had to give a 5-point stop. A 5-point stop. But where's my target? 145. So I risked 5 points to make 10 points. So the risk reward is still within reality, but it's nowhere as near as good as if I would have got in early. So all you do is get in, set your stop, set your profit targets, and then go to work. Okay, now I did set my profit targets early. I set one at 150, which is 1-to-1. I typically will take profit at 1-to-1. So worst case scenario, that's all I'm going to get. But 9 times out of 10, it's going to go past 1-to-1. I just want to make sure that if the thing reverses, I've got profit locked in. And I'm going to show you an example why in just a minute. But I want to finish out this one. There was another level at 147. You got to ignore this. This is from Friday. This has no bearing on the 10th. There was another level here at 147. Okay, that I just could not ignore. I was like, I can't ignore this. I have to respect this, and I have to take a piece off here. I gotta have it in here so that I could take a piece off. And you could see, what level was it? 147.74, right there. And you could see the price action did react to this level. You could look at it and see it did react to this level. We sold through it relatively easily, but we bounced, and we did reject on this for two candles for 10 minutes. We worked this level. So it only made sense for me. Well, this just verified that I did the right thing by taking profit there. And then since I took it there, I'm like, look, I'm not going to worry about this. There's another level down here at 142.10. You can bear. I'm gonna have to put it here, but there's another level here at 142.10 that I was trying to get, and I was like, this is gonna be, final target, 142.10, and sure enough, it hit, running all the way down to 140. I mean, you can't predict this stuff. You can't predict it. So you have to just set your targets and be happy with it. Now, it did come all the way down to 140, but that's fine. Guess what? We got the meat of the move. We got the meat of the move. And so we ended up making $3,700. Could have made $6 grand on this if I'd have caught the first part. But hey, it is what it is. Our job is to catch the meat of the move, build a viable trade plan, and execute it. Okay, that's our job, and that's what we did here. So there's no reason why we can't find a couple of these a week. At least one. One will make your week. But 2 or 3 would be even better. All right, so let's take a look at, and I gave you guys this idea on Friday. So let me bring the chart back up here. Apple. So this was an idea on Friday. Look at the gap down. Apple gap down. All right. So what was the high coming in after market? What was the high? There we go. Right there. So we gapped down from that high. Now the stock did push back up. It rejected here, pulled back, rejected here. It could not get back up here. Now here, we were making lower lows, but here we had this volatility spike right before the open. But it could not break through. You know, we couldn't do anything. So this is kind of one of those days where it did not work. I mean, I can't explain it any other way. It just did not work. It did not give you a clean setup. Okay, there's no clean, clear setup to get in this, at all. Here on this last bounce, we made a higher high. Look at this. And I'm sorry, I meant that this isn't Friday. This is the same day that we were looking at ROKU. But I wanted to point this out because this shows you when you don't want to get in one of these. So even though we didn't break the high of this, we've got some support here from aftermarket. This is where it sold off, and we've got support through here. You can see that. Then here it acted kind of as resistance. So this is just not clean. This didn't look really clean. We had the volatility spikes here. Don't really like it. Now, yeah, you could have jumped in here, but guess what? You have pre-market low sitting right here that you have got to respect. Got to respect this pre-market low. All right. So this is an example of where you don't want to get mixed up in this. Now, had this come down and bounced and then came back through and rejected this, then yeah, you could get in this and hold it for the rest of the day. Okay. Now, figuring out where your stop would be, that would be the trick on this. Where could you place your risk? You would have to look at some daily support or daily resistance. Because up here, it would be way too far for you to put your risk. But as you can see, this never really took off. It never really sold off. We lost some volatility in here. Look at the candlesticks. So this just tells you, hey, stay away from me. Just stay the hell away. You don't want to mess with that. So let's go to Friday real quick. All right. So that was the 12th. All right, so here's Friday, the 13th. Okay, here's Friday. Here's what we woke up to. All right, here is the low of the aftermarket yesterday or the previous day. And then Here is a higher pre-market. This is the high that pre-market set. All right, let's get this. So you know this is the high. So we came down. We never could break through. Then we had this huge sell-off candle here at 8 o'clock. So this was not an entry right here. This would have been me guessing if I would have entered here. So we sold off and we had a volatility spike back up to this level. It didn't push. And look at what we're doing here. Look at what we're putting in. We're putting in higher lows, right? No trade. Guys, no trade. No guessing. And then now, here is the pre-market low. Again, remember, pre-market low has to be respected. You cannot disrespect the pre-market low. So we've got here. So there's no trade up in here. I'm not a scalper on this. Now, yeah, you could have scalped this pre-market. But why? You know, the only entry on this, the ideal entry would be just below this. So no scalping for me on it. I have to wait for the market to open and do what it's going to do. So here it opened. We came up. Look at the retest of this pre-market high. On the fail, here's the entry right here. Entry right here when we broke the low of this. Entry right here. Where's your risk going to be? If it takes out the pre-market low, your trade plan is dead at that point. Now, yeah, ideally, you want it to be up here. Or better yet, up here. But you can't do that. The risk is just too great of a risk. So you can't even do it up here. You have to find the next logical place to risk. If this thing breaks trend, what would signify this thing breaking trend and not working for you? It would be this level. So the entry would be right here. Let's find the right price on that. 219.68. Let's say we got in at 219.65. Risk is going to be 220.70. Which we're going to give it a couple of cents. So we'll say 221. 221 would be our risk and 219.65. This has to be figured before you even take the trade. You have to make sure you know where your risk is going to be before you take the trade. Because on top of where your risk is going to be, where's your profit going to be? Where's your profit potential? And on this, 217 was the level. 217 was the target. It didn't quite get there. Missed it by a couple of cents. So, your first, so knowing that this would be the target, and you get it, and your potential entry was going to be somewhere between 219 and 220. Does this make sense? If you risk here, your profit, your final profit target is going to be down here. Does that trade make sense? Yeah. So damn right, enter it, pick a spot halfway between, which was around 218.25. Somewhere in there, halfway in between, you would have hit that target, and never did quite hit 217. Or did it? Let's see. No, I hit 217.02. It didn't quite hit that until this thing ripped up. And this would have stopped you out. Because you would definitely have moved your stop down. Hopefully you would have moved your stop down. But if you'd had it at break even, still at break even, it would have taken you out at break even over here. Still would have locked in profit, but you could see, you get the idea of what I'm looking for. And then how I find these is when I log on to Thinkorswim about 6:15, that scan is already running. And in the class, I show you that scan. I think I show you how to put that scan together. But, Trade Ideas doesn't start running until 6:45. Thinkorswim starts at 6. And so I see these stocks like Roku or Facebook or Tesla or Baba, Apple, any one of these stocks that are running early, that has volume early, and they may be gapping down or gapping up, that's going to draw my attention for an all-day hold. I like looking at the FANG stocks, the ones that I can actually trade. Like Google and Amazon, I can't do nothing with. So I could give a shit what it does or what they do. But Facebook, Apple, Netflix, and then I look at Baba, what's the other one? Tesla. All of those I look at. So hopefully, I know this was a long explanation. It took longer than I expected it would, but hopefully you guys understand what I'm looking at, and that will cause you to pay a little bit more attention to the class. There's several out there. There's one that I did previously, and then there's an update, and then there's going to be even more update at the end of this day trading class cycle. But go back and look at those so you can get the right idea, and you can see the evolution. That the base strategy stays the same. They're just little tweaks that you have to make as the market changes. So I hope you guys have a great rest of the day, and I will see you guys first thing on Monday morning.